All right.
Yeah.
Okay, so we're now live on custom streaming service. So welcome everybody to Tony Lupino and Sarah Olney-Ross. We thought we'd do a session this afternoon for an hour on the very successful BYOB, Be Your Own Bank strategy. This works across all time frames. It's very good for new members in particular to start grabbing those 5 to 10 pips a day with using 3 simple confirmations. And it's something that we do every day live at 10 a.m. UK time with Paul Turner. So do join us on that. If you want a 7-day free trial, please contact Tony, myself, or anyone else that you know, and we can let you have access to that. So let me just share screen and show you some of what we're doing. Now today, it's the 4th quarter, it's coming up to the last month of the year in the trading year. It's something called non-farm payroll, which basically is all the employment, unemployment figures, everything outside of agriculture, and that has a huge effect on the markets. But several of us this morning, many of us have had very successful trades already. Someone called Barley, who we follow, does done-for-you trades. People got 100 pips off that. I've done 30 pips this morning in 50 minutes, and that's me done for the day. So, you know, if you follow the rules, follow a strategy, get with someone like Tony, then, you know, you'll be absolutely fine in our group. So I'm just going to share a screen, show you what we actually do. So now we have something called Vibrata here. I'll just open the window to show you the wonderful academy that we have. And this is what you get access to, lots of good stuff in here, so you can, at your own pace, learn whatever you need to know as you go along. But as I say, we get you earning pips. Now I have to say a disclaimer that past profits don't indicate future performance. Trade at your own risk. We're not allowed to entice people in. So we look at the products here. Some of these, like the Harmonic Scanner that some of us use, are free with your package, the various different packages, and then you can choose your packages from here. So one of the longer term ones, bounce back with sniper trades, where we know how to work, how the bankers are manipulating the system, highly successful for swing trading. And then Vibrata, you can see it's padlocked. I haven't got this at the moment because I'm just doing Harmonic Scanner, BYOB indicators, and then I've gone for the longer term sniper strategy. But quite a lot of team members do this every morning, Tony included. I do join the sessions, and this is where you go to actually look at the trades. So Tony can go through some of those with you. Now, you can also go to Trading View. This is what quite a lot of us use just to mark up our charts. I like to keep old scans, so I do everything on Trading View, and you can put on various indicators. If you've got the paid version, you can have a free version, up to 3 indicators, so you don't have to bother about getting a paid version. So let's just open up one of the we always check Forex Factory first, I should say that. So Friday the 6th of December, as I said, you can see here non-farm employment change, very big announcement. That's at, I'm on Paris time, I'm in mainland Europe, Tony's in the UK, so that would be 1:30. It's just happened about 40 minutes ago, so we'll see how that's affected the charts. Normally we avoid that, and particularly trading what we call red flag news, 1 hour either side, because it can spike the markets, and bankers hide their strategies under the news, which we all know about as retail traders. So you can see this afternoon heavily affected by Canadian dollar, that's CAD, and USD. Wow. So yeah, so this will probably be, as Tony and I were chatting earlier on, more of a training and demo session. I don't think either of us will actually be placing live trades. Certainly I've done my weekly target this morning, sorry, my daily target this morning, plus another 5 pips. But we wanted to round off the week because we've still got next week to go. You can join our 7-day free trial, so please reach out to Tony if you're interested in that. So let's have a look at one pair, and then if Tony's set up after I've looked at this pair, we'll swap a bit to Tony, but I'm quite happy to carry on whatever Tony would like to do. So I'll just show you on BYOB, we enter on the 15-minute, or you can take the bigger time frames. So as I say, sorry, I just need to get rid of that brush mark. We've been testing the longer term time frames, and it's certainly BYOB, Be Your Own Bank, works very successfully across that. So let me just take off some of this information that you don't need to bother with. Just hide these horizontal lines and alerts. Because the thing about trading is you don't have to sit at the charts all the time. You simply set alerts. There's something called call apps, which is a free alert on your phone if you don't have the paid version of TradingView, for example, where you can set alerts. So if we look on the 15-minute on GBP USD, I'm just going to turn on the SARs. That's one of our confirmations, these little dots, and you get in on a SAR flip. That's one of our confirmations for BYOB. So we do all the heavy lifting for you in the system. And if we put the stochastic on, all you need to know about the stochastic is that it's what you call an indicator. And let me just see if I can get that up a bit. And you will be selling if it's overbought, i.e. it's over 80 on the value range, and if it's under 20 or under, or oversold on the lower range, and that gives you an indication. Then the third one is you're looking for a flat bottom candle, and that's it. So I took this trade. I got in actually a little bit further down, but I had some other confirmations that I happened to use on this one. And in 50 minutes, I had got, now my trade goal is usually 20 pips, but I decided because of the strong downward momentum on this at the time that I would go for the 25. So what I do is I move the stop loss to stop profit to give me a risk-free trade. And then I moved it a certain number of pips and took it all the way down to 25, and that was me done for the day. So that's GBP USD. Now if we look at how the non-farm payroll has spiked the market, now it'll be 2:30 my time, that's 1:30 UK time this happened. So you can see that it's just coming up now, beg your pardon, because I'm an hour ahead. So mine says
yeah, it's 15 minutes to go.
It's 15 minutes to go. So
yeah.
what happens typically is you will find you get a fake out, and the candle will push in the opposite direction of the news. Now some people trade the news. We tend to stay away from it an hour either side. I do trade the news sometimes, but I do it as part of a team. And it's not you will see probably what happens. It will go one way on the close of the minute, and then at the close of the last minute before the news announcement, it will then after that suddenly drop down massively or go spike up massively. And some people actually do trade those candles, but you have to do it as part of a team really. It's not advisable to get involved with red flag news if you can help it. And then the other trade I took was a Euro USD, I think it was. Now because I had done my, I may have closed it down, because I'd done my daily target, and Tony will go through some more of the BYOB, and I'll join in. I wasn't bothered about trying to go for a lot of pips. So this is what we call, this was opening of London session, which is the biggest financial market. So it was Euro GBP that I took, that one, so I have got it here. Right, so let me just, this is another little exit indicator, don't have to use that. Sorry about these vertical orange lines, nothing to do with me, it's the software spikes when it hits a particular line of support and resistance at zeros. but let me just show you on the 15-minute what happened with this trade. So once you've learnt with us, you know, about proper risk management, you can grow your account nice and steadily, trade with us in a team every day. I think each week we now have, just within our own team, and remember we're part of over 100,000 customers, been in business 6 years, that are successfully trading like this. You can join in sessions to suit you no matter where you are in the world. And we also have a very good Q&A session on a Monday night with Brian Knight, who is down in Australia. So I'll just add in the stochastics so you can see what I said about overbought. You're coming in at the peak, or oversold. You're going to come in for a buy when it's down here. And then the other one I turn on, and these indicators are all set up for you with the settings, so you all you need to do is click them on and off. It's as simple as that. So you can see on this one, and I can take that off, that's me setting an alert, just so I know I can monitor my trade. Whoops, and I was trading on the big computer, not on my phone, which is why it's on here. So I'm on the 15-minute on this. You can see that the SAR flipped down here. We had just about a flat bottom candle, tiny, tiny, tiny wick, and a tiny wick there, and then here a flat bottom candle. So if I put a vertical line on for you, you can see how simple it is to do this BYOB strategy. But as I say, what we've been testing it for is working it on, because it works across all time frames. Shorter the time frame, you go for 5 to 10 pips if you're on the 5 to 15 minute, and upwards of that you'll get 50 or 60 pips in a normal season. The last quarter of the trading season, where you would typically get 50 or 60 pips, you'll be looking for 20. But as I say, we've had some very good swing trades. They're what you call the longer term ones, where you're holding them for the whole day or overnight. And we've just had one this morning of 100 pips. So you could have got in here on the 15-minute on BYOB. You can see it's crossed this strong line of support and resistance, strong. You're going to come in. Sorry, I came in back here. I was looking at it from back here. And this took me 50 minutes, so it is more like one of our hourly ones. So you've got the flat bottom candle, you've got the flip of the SAR here with a tiny, tiny wick. I actually didn't get in till up there eventually. And it went for 20 pips. But what I did, because I was in slightly late, was I just got out at the 5 pips, because remember, you are compounding, you're using our compounding spreadsheet and growing your account. And I didn't need more than 5 pips. I didn't need to be, that's one, that was, you know, I'd already done 25 pips, which is my daily goal. So I got out after 5 pips, and then it did turn. So once you learn the system, you can press the buttons and get exactly in on the entry, which is what we've been doing very successfully. Or I was just looking for a few pips on this one. So that was my experience this morning, both very successful. And once I've got in a trade, as soon as it starts to move, then I will move my stop loss, we call it. That's this red box. You don't really want to be in there any more than you can help it. That's called drawdown, but always set a stop loss. So I always set a stop loss. And then once I've moved into the green, I move my stop loss into stop profit for a risk-free trade. So that was me on my 2 pairs this morning. I don't know how if you've got any comments from this morning, Tony?
Not really. I did watch it from the beginning in the morning, from some of our traders worldwide, especially in America. And the markets looked, to me, they looked a bit choppy. I did follow them. I didn't get into anything. I was just watching basically and getting an idea, because obviously everybody is aware of non-farm payroll and all that sort of stuff, which has a massive impact on the world markets. So I was taking it easy and just watching, basically.
Yes, okay. Well, I'll show you one other that I looked at. this will help people understand correlating pairs. So basically a correlating pair is where you are trading the same currency. So you can see them down here. My orange ones are marked up for London, GBP AUD, GBP, JPY, Japanese yen, GBP, NZD for New Zealand dollar. So if I've selected to get in one pair on one currency, I would not generally get into another, what we call correlating pair, another GBP pair for a trade at the same time. The reason for this is you could be doubling your reward, but you're also doubling your risk. So we tend to avoid correlating pairs. So at the same time, I decided to get into GBP, that's the British pound, USD, US dollar. And we're going to watch what happens with the news in a minute on that GBP in 7 minutes, just so I can show you, or we can show you how the charts move. But I got into GBP CAD. Sorry, I didn't get into GBP CAD because I was in GBP USD, but I did have it marked up. So if we go to the 15-minute, and you don't have to bother to look at that scan. I do use the Harmonic Scanner with BYOB. So I also looked at GBP CAD, which is another pair I quite like some of the time, but it can move quite fast sometimes. So let's just increase that. And what I'll do is I'll put on the BYOB, Be Your Own Bank, that we trade every morning at 10. You can come in for a 7-day free trial, see what it's all about. Just get rid of that for you. Get rid of that. Right, so if I put the stochastic on, just click the button and put on the SAR flip, these little dots that tell you when price is about to change. So you can see up here, just bring that out there. Oh, it's a little bit slow because I'm recording. So open of London, here 8:15, that's 7:15 UK time. So just ahead of London, just as it's opening, because Frankfurt opens, I think, an hour earlier than London, so you start to get the movement then. You can see this line is called the 62 EMA. It's the average of price over 62 days. So price will always, like a Hoover, suck back to that line. So the further apart from it, you can see it's right down here, means that it's in a heavy momentum, coming down if your gap is wider than this 15-minute, this thinner orange line. So that says to me that, it was still coming down, but I also do look at where it crosses over. So it crossed over right back here in an upward momentum, but the scan was downward. And then if I look at the BYOB, which are the very simple alerts, so that's just some context for you. You don't have to add these other things in, but I find there's a lot of synergy between these two strategies. And Les, one of our other team members, he also looks at the scanner. So I've got strong lines, some lines of support and resistance marked. You can see how price has respected that, rejected off it, as coming back up now, and the SAR flips indicate that. Here's the support and resistance here. So it did a break and retest, it didn't like it, and then sure enough, I just move this over now, get that information out the way, so we don't really need it. 514, so I got in at 3, I would have got in at 3, 514, 514, so I would have got in at, can't remember exactly without looking on my MT4, so I'll just leave that where it is at the moment because it doesn't matter now. I just want to come on to what the live chart's actually doing in 4 minutes, so forgive me if I'm rushing a bit. So let's draw a vertical line, see where they lined up. So we're talking about opening of London, biggest money market, prices move at that time. You can see the SAR flip here, flat bottom candle, and it's peaked here on the stochastic. So that's all you need to look at. Perfect entry. and it actually went down 60 pips. And there's my trend line now. I drew my trend line on the 1 minute because I'm only working on a 10 pip stop loss, and here I'd covered something called the pitchfork and quarter theory. So you can add on various other indicators, or you can just leave it at those three, because that's all you need. The stochastic overbought at over 80. Yes, it was at a peak. Flat bottom candle showing it's a strong, solid move down or move up, vice versa, depending on which way around the market's going, and then has the SAR flip. So here are 3 dots there. It flipped here, perfect entry. And if I show you how long it took, if you'd got in up there, we've done all the heavy lifting, all done for you. Now, say you didn't even take it down to that wick, because you probably never ever get the full entry. You had 68.9, 70 pips there. You could have decided to have got out here on this, what we call quarter theory. Bankers settle up on zeros. So if you'd got out here at quarter theory in 1 hour 15, you would have had 47.5 pips, thereabouts, call it 45 pips. So you can see how you could just follow it down to that first SAR flip down there, which would have given you 44 pips in 2 hours 30. So massively easy to do. I'm just so impressed. I don't know what you think, Tony, but I'm just so impressed with BYOB. It's just so simple,
Yeah, that's why. Yeah, it is. You've got it
Fantastic,
right. It is
isn't it?
very, very simple.
Very
A lot of
simple.
people crowd their platforms with so many indicators, and what people aren't forgetting is they're lagging indicators. Most of them.
Good point.
It's the candles that actually are the main thing. But yes, if you've got certain indicators and you can narrow them down, because if you look at so many, they end up giving you a headache and you end up giving up. So there's no point.
Yeah, it's a bit like snow blindness, isn't it? You look at so many and it's like driving a car in the snow.
The saying is keep it simple, stupid, and that is exactly what it's all about. Keep it simple, so somebody new could come in and have a look at it and they can analyze it within seconds, do a few other checks, and then it's down to them whether they want to enter or not. That's why we work as a group, and somebody might see something that we haven't spotted and say, oh, I wouldn't quite yet because of that, and they're right, or they say, no, let's go on with it.
There we are. So here you can see we've had the news, and there's your 1 minute candle.
Yeah.
Absolutely smashing it down at 14:30. That's 1:30 UK time. So
Wow.
interestingly, this candle was the indecision candle, and normally it will fake you up more than that. So from that candle, I could not have traded the news, because it wouldn't have given me. I wonder if the bankers are doing that deliberately to fool us, because from that, normally that would have been a strong buy candle as a fake out in the last closing minute before the non-farm payroll strikes at 1:30 UK time, and it didn't do it. So I couldn't have got in that trade, even trading as a group. I do trade the news with a group, because we wouldn't have known whether to buy or sell. And the last thing you want is guessing, because it can, as you can see, it dropped in 1 minute. It's dropped something, including the wick, 20 pips in a minute. And you don't. And some people, they say, well, they'll set 2 trades, both a buy and a sell. I never recommend that. In fact, it's dropping more. It's probably going to go 50, which is
on the 1 minute, it's going crazy. So
yeah. So if you hedge your bets and have a buy and a sell, I think that's a very foolish way to trade the news, because even setting a stop loss and pressing the button straight away on your phone, you're going to get caught out one way or the other. And something that other people do is, I think Oren Wright teaches us this, is once you finish the whole move, and this is something, if you're a bit more advanced as a trader, you can put what we call a Fibonacci on, because price generally will come back up to the 50% of the move. I have tried this myself, but I have to say not very successfully. But that is because it's what we call an imbalance, which Tony knows all about from our bankers testing. testing our sniper strategy. So look, it's still going down, but there's no way you could have got into that trade because it was an indecision candle, what we call a doji, when the minute before the news struck. And interestingly, you'll see here on the stochastic that you know, it's still coming down. So the next move will be that it's going to return to some form of balance and come up again. And that's where you can use these SAR flips. So if I put this now on the hourly, normally, as I say, we let news settle down, and also it's Friday, so coming into Friday afternoon, evening, we probably wouldn't be doing a lot of trading unless you're a longer term swing trader and you want to keep your positions over the weekend, because you get the spreads and commissions, but if you know, to pay for. But if you're going for bigger pips, then some people say, well, it all evens out. You just have to decide on your trading style. Mine is a scalper, intraday, in and out in 49 minutes for 25 pips is ideal for me, and then I can go about my day, and I don't have to worry about the charts. I'm just compounding my growth account over time, consistently and slowly and steadily. But some people like the swing trading, and I like the done for you trades, like the barley one, 100 pips. Hell, who isn't going to like that? So here you are on the hourly with the BYOB indicators. You can see that the red, I always get muddled up. So the red are the sellers and the blue are the buyers. I presume that's correct. So what you want is a gap between the two, and what we're looking for now is for it to finish its downward momentum, come under 20, and then turn up with the, like you can see here with the blue, and back here you can see it here with the dark blue on top, and a gap showing the bars are in control, and you can see that happens on that move there. So here on the hourly, you can see the timer here. You've got 25 minutes before this candle closes, still heading down. So that's the direct effect of the red news today. You can see the SAR flip on the hourly happened back here with a flat bottom candle. I can take that yellow trend line off now. So you know, within each candle, like this hourly, you'll have exactly the same pattern in the market across the hourly, 4 hourly, daily, or going down. I'll get rid of that risk and reward. You just click on that for your long position for a buy or a short for a sell. As I say, it's all done for you. Just click the indicators. Once you understand what they are, you've only got 3 you have to bother with for our daily BYOB, trading every day with Paul Turner at 10 a.m. UK time. And you can even have, we are allowed to share tools free for 7 days as part of our bigger company that we've been involved with now for quite a few years. Very solid AAA rated company. So the SAR flipped here on the hourly. There is a wick. I don't know how you feel about this, Tony, because there are some wicks on that, aren't there?
Which currency?
But there isn't there. This is GBP USD.
Yeah.
There isn't there before the SAR flipped by 3 dots, and it's quite high up there.
You're on the hour, aren't you?
I'm on the hour because we were going to test some hourly.
Yeah. Yeah, it's a bit, let's have a look on the hour. I normally go onto the day just to get confirmation of where it's going. It's turning, the sarcastics it's showing, it is turning a little bit. It's coming down on the sale on the daily.
Right.
On the hour, that's another indicator for me. So it's easy to flick over to it and have a look. It has originally, it was coming down on a sell, gone back on itself, and then started coming back down again. So I would probably like to see that settle a bit more. I'd like to see more in the sarcastics coming down.
Yeah.
Yeah. And the candles are looking a little bit weak. So
yes,
yeah.
It's a smaller pip range within these orange bands. Is 50 pips on the daily.
And a little bit more gap between the candles and the SARBs as well.
Oh yes, I forgot. I keep forgetting about that. Let me come back to the hourly. Now, what does that actually mean when you have a bigger gap? What's it?
I think it's a stronger signal. I mean, the SARB shows it's a signal showing that it's a buy or a sell, and from what I've been told, the gap between them, if it's not massively too big, But if it is decent, there's a decent size, at least half a candle or a bit more, it shows the strength in the trend. But as you can see, you've had 3 candles in the sale, and then it's gone back for a buy on 3 as well. So it's quite correct on what it's doing.
What, back on the hourly?
On the alley, yeah, it's showing a return. It's showing a buy halfway down.
Oh yes, and now it's coming back on itself.
Yeah, exactly. So what you're
Right.
looking for is you're looking for a nice clean trend. Let's see. Yeah, I'm now going on to, yeah.
Do you want to share your screen and show us?
Yeah, I could do that. Bear with me, I'll just share.
Hang on, I think I have to, let me stop sharing.
Cannot, oh,
That's
right.
it.
Okay, sorry, I was a bit too quick for you. Right, let's see what we can do
I think
here.
that was quite interesting, doing a session where we could actually see something happening on the news.
Yeah,
Shows people the power of that red news and why to avoid it.
Yeah, right, let's come on to, right, can you see my screen now?
Not yet, but it might just be slightly slow.
Hang on, no, I haven't put share yet. You should be able to see
Yeah,
it now.
yeah.
Okay, basically what I'm talking about is the SARB is so close.
Okay.
As you can see, it's literally touching. Now you need gap in it. I'm just trying to find if I can see a pair or where you can see the gap there, and there's a gap there.
Oh, right, okay.
The further the distance, the better. I know it's completely opposite on the other platforms, but yeah, it's better having a gap because you can see a return in the trend there.
Yes.
And also the SARB, the stochastics here as well. You're not trending down, and then there's a sudden reversal, almost touching the 20%.
Yes.
So, I mean, what I normally do on the hour generally is I go through all my pairs here that I've got lined up.
Yeah. And you've overlaid that with your BYOB template.
I've got the BYOB, yes, and then because I do a little bit more advanced, there's a more advanced one I'm working on, which is proving quite successful, but I won't explain that today because the first thing they've got to do, any newcomers or any people that's just trying it out for the first time or sticking with it, I would stick with a 15-minute BYOB that Paul does on his training at 9 o'clock.
Mm.
And my advice is stick with that until you've got at least probably 40, 50 trades. You will get a few losses, but under your belt, you feel confident, and then start looking to add things to it.
Yes, sorry everyone, I should have pointed out when I say 10 a.m. that's Paris time because I'm in Europe. Paul's training is at 9 a.m. UK time every day. Please ask Tony for more information how you can access that. Tony Lupino.
What I normally do is I go through all the pairs every morning quite quickly, and then I check to see what's happening. Like with this down here, G8, the stochastics are just starting to move. I'd like to see both the blue and the red line breaking through that white line there, going up, and also I would like to see another candle coming up, preferably with a flat bottom, as is trained with shown on Paul's training session, and a SARB. So obviously there's a little bit more time to wait there. What I could do, and what I generally do, is I'd put the cursor probably about there, and then I set an alarm, and then I would put moving up or moving down, moving up, 1 bar, and then I create an alarm. So when basically it triggers, this triggers up when it's gone further up with the stochastics.
Yeah.
It lets me know it's going further up, and then I can have a quick look at it and see whether or not it fits my criteria of entering a trade. Also, I check the day to make sure that's a possibility, which it is.
So do you wait for a close of candle on the hourly before entering?
No, because you don't know when it's entered, because with the hour there's no time on it. Sorry, with the daily there's no time. So I assume if it's where I am now, because it's based on English time anyway, Greenwich Mean Time, if I'm there early in the morning, I assume it's got all day. Okay, so if there is a decent candle there, if it's too small, I don't bother with it. But if it's a reasonable candle, or even two, depending on when I look at it or when the alarm goes off, and it's going in the right direction, then obviously I enter on the hour, but it's based on what the daily tells me as well, and also the other indicators.
So can you explain to people what you mean by a decent candle? Do you mean amount of pips in it? And how would you work out what you mean by a decent candle?
A
Have you got an
decent candle is the
example?
size of candle. Okay, I'll just see if I can home in a bit on it. No, it's not working. Right, I'll just go down this one because it's easier. You can see all these candles here. I'm not referring to either a buyer or a seller at the moment. I'm just looking at the candle itself, okay? That one there is a decent candle. That one there is not.
Oh, okay.
Decent candle, not.
They've got proper bodies on them.
Yeah. What I found out through the trading through IML TV and all the training programs they've got, which are absolutely excellent, the more, the thicker the candle itself, not the wick, the more the money is in the market.
Yeah.
Okay.
Yeah,
when there's a wick,
when
there's a smaller or bigger wick, it means indecision. What's happening? The buyers are waiting to see what the sellers are doing, and vice versa. And that's basically what it is. So the bigger the candle, you know that there's more volume in the market. If there's a very little candle, so small, I don't even bother looking at it. I just carry on.
I get you.
There's so many pairs here to choose from. I mean, I can get down these normally within about 2 minutes. I mean, all I do is, let's say, look at the next one. This is based on the hour. As you can see there, that's going up, that's going up. That's not bad. No flat bottom yet. So
now, isn't that interesting? The British pound against the USD dropped.
Yeah.
But against the Canadian dollar, it's risen, and this is why you don't want to really hedge your bets and on correlating pairs, particularly when you're trading news.
Some people have favourite pairs though, and they like trading different pairs, and they've got confidence in it. But yeah, you're quite right. Yeah, I mean, with this one, that's not bad. I mean, look at that. Stochastics is good, looking good. It's got a nice angle going up. That's going up, but there's no flat bottom. As I say, I checked the daily. That's looking good as well. It's probably got a little bit more room before it flips. So that would be a possibility of getting into one. What I do as well is myself, but this is where I say you've got to be trading and you've got to get more confidence with just the BYOB. I do add this just to get an idea of which way the platform is going. Now it shows me that there is.
Oh yes, this is your Ichimoku cloud.
Correct, right. So I see coming up that there's going to be a buy, and also I look at what's happening there, and I look at what's happening here. But you look at the overall cloud, and it's showing a buy. So that would be a good sign for me. Basically, once you get used to it and you've done it a few times, you quickly examine the platform and what's going on, and then you know, gut feeling, get into it, and that's it really.
So I know you've been in quite a while, and have you tried a lot of strategies, and what is it you like about BYOB?
Simple. I mean, someone coming in who's never done it before can get the idea of it within 2 or 3 days.
Yeah, I totally agree.
And then by the end of the week, if they're using a 7-day free trial, I mean, they should be on a dummy account. They should be seeing money coming in on a dummy account, which will give them enough confidence to say, yeah, let's give it a go. That's the whole of it.
And then even then they've got another 7 days risk-free.
Yeah,
if they decide once they're in they don't like it.
I mean, at the end of the day, with the EC11, it's a fantastic platform, but it does take a little bit longer, and people do get put off with it a little bit, unless you know what you're doing.
The one with the cloud that you just showed us. Yeah.
It's a perfect platform for looking a little bit towards the future and what's happening. You still have to do your own analysis, but for learners and beginners, BYOB is smack on.
Well, I think you've hit the nail on the head there, because I mean, I totally agree about over the longer term getting more confidence in terms of understanding the context and learning, you know, why things are happening.
Yeah,
But
yeah.
the beauty of BYOB, as you say, is it's so simple. You actually just have to look at three things, click a button, and and particularly with the group trading, because there's always what, 20 up to 35 of us on each morning,
Yeah, yeah.
all saying collectively, we win together, we lose together, we trade together. Shall we
Well,
get in or not? And that gives you huge confidence, doesn't it? To
it does.
take,
I mean,
it's
Paul's got a
fantastic.
fantastic winning rate, which is brilliant because he
Oh
looks for
yeah,
perfection, and that's
95% or something.
which is what it's all about at the end of the day.
Mm,
People come in here
mm.
to, you know, make, or, you know, they want their dreams fulfilled. That's what it's all about. And this is a
Yeah.
vehicle of doing it, basically.
Yeah,
So,
totally agree. And I mean, you know, there's so many people where, you know, we're all busy and we're people have jobs and other
yeah,
commitments, and to be able to find the time in between, you know, going to work, cooking dinner, putting the kids to bed, you know,
yeah.
whatever else is going on. I think
Mm.
BYOB is so perfect because you've got virtually 24/7 trading market.
Well, that's what I
And you
like
can
about,
just fit
yeah,
it in, you know, can't you?
that's what I like about the hourly now, is because it's a more settled time frame.
Mm,
I can enter, or I can look for a trade at 7 in the morning, 6 in the morning, or even 3 or 4 in the afternoon.
mm,
After 4, it gets very slow,
mm.
which gets a little bit, yeah, slow for some, especially me. But in between those times, it's ideal if you're just looking around, and that's why I now start to put on the trades I'm looking at onto the
Well, of course, one thing we haven't mentioned, because we're talking about the pace of the market at different times of day, is on the Vibrata tool, which used to be called the Web Analyzer. It is
yeah,
actually doing the heavy lifting and calling out when the reversals, you know, when these up or down buy or sell opportunities
yeah.
are taking place. There we are. If you can just run through an example here, Tony, that would be
Well,
helpful.
basically, yeah. I mean, once you start, if you're a beginner, once you get onto Vibrata, which is up there, you can see it in the top left-hand corner, which was formerly called the Web Analyzer. You've got all the time frames up here, and you can add what you like to suit your time frame or the one that you prefer. But we generally use the 15. I sometimes use the 1 minute just for accuracy. If I'm not quite sure about it, I'll look at that, and it will tell me which way the candles are going, but it is a lot quicker than the 15. Well, it's one of the fastest there, but don't be put off with that. It's just an accuracy of pinpointing it down to the nearest pip of entry. That's all it's for.
Mm.
Those are different time frames. And then down here, I'll just quickly show people this. I mean, even though we're using that, the choice is amazing because everybody has different ideas or different ways of trading. At the moment, you can start off with BYOB, but this gives you an idea of what is available from all the trainers in IML. It's just incredible. You choose the one you like. As we say, the Ninja Group use the BYOB, which we click on, and then you do that, and it's there. Once you join, you get all the settings and things like that, and how to set it up. But the most important thing is you get trade ideas coming on the left-hand side. This is from the company themselves. If you want to look into those, it's personal choice. We also have a load of different other traders down here, like the loan payout and things like that. We're a little bit more advanced, which I wouldn't suggest you look at until you get comfortable with BYOB. And giving you an idea, I'll just do one here. All you do is click on that little blue round circle there, and then I'll bring up that pair. Okay, and then it shows you exactly what's happening. And then you can see straight away, I generally look at the stochastics. It shows it's on a return up. But what could happen is it could also come back down because the SARBs haven't shown themselves yet.
Oh, good point.
So I would wait until it goes further up. And then if the SARBs are there, there's a flat bottom, as you can see there. The SARB will show you that it's a strong trend upwards. And then if you want, you can check it out on the 15 and other time frames just to make sure the trend is going in the way you want it to go into. Okay, always
Mm.
do that. And this is where the training comes in. This is where Trading Live with all the group comes in. They mention that because you won't remember everything. No one does. So this is why people bring up little things, and we go through all these little step by step by step until you're confident to do it on your own. That's what it's based on.
Well, I think one of the key points you mentioned there, thanks Tony for that, that's very enlightening, was ironically one is spoilt for choice. And I think, you know, you'd agree with me that there's so, it's like, as Paul calls it, that smorgasbord in the, you know, in the, across the Chinese buffet, if they have smorgasbords. That's Swedish, isn't it? But you know, you can, you know, I'm hungry, but what the hell do I choose? You know, which do I go for? And that's why we've now honed the team down. There's you know, several hundred of us that come in, and then filtered down into saying, okay, then let's consolidate onto this very simple strategy which anyone can get successful as Tony says, within 1, 2, 3 days on a demo account. We always advise demo first. And then once you've gone live, because there's an emotional switch that then switches on once you make that track. I can remember that so clearly that day, that first day I went live. And then, as Tony says, you can add on a couple of other indicators according to your own personal trading style and look and feel. For example, he's put what we call the itchy cloud on, as we call it.
But get advice first from the people in the team.
Yes.
We have got fantastic trainers. We've got fantastic traders. Some of them would not admit it, but they are world-class traders.
Yes,
they are world-class traders, but they wouldn't admit it because, you know, they're not big-headed. But
well, I think that's the thing about trading, isn't it? You find the most successful people generally are modest.
Yeah, and they're there to help.
Very helpful, very helpful.
They're there to help with anything.
I know.
Which is fantastic.
And you know, we should give a shout out to Brian Knight, our wonderful chap in Australia who does 8 p.m. and Anne, 8 p.m. UK time on a Monday, a Q&A session. And then they do a 2-hour, two sessions a week, baby boomer power hour for the US Canadian market. Again, they teach this strategy. So you've got plenty to choose from in terms of understanding this strategy and finding a time slot that suits you, no matter where you are in the world, or whether you're doing shift work, driving a lot like Colin, you know, whatever your other commitments are, to be able to fit this in as a side hustle. And then we've just developed a plan on how you can get financially free within a year. So again, you know, do reach out to Tony or to me if you want that compounding spreadsheet, and a little booklet that we've now written with Paul that we can prove to you how you can achieve that.
Yeah, the other thing that we do, which I do as well now, is once a trading session's over, if there's anything that looks like it's looming or about to take place or probably come into a trade within the next half an hour or an hour, all that is put on our hub that we've created very recently. And every trading group put trades on that hub. So if you're getting up late or you're working or you're coming in or whatever, from whatever you're doing, you still got, life goes on. You can connect to the hub and see what's going on and see what trades are about to go active, which is brilliant.
That's brilliant, isn't it? That's
takes a lot of hard work for a lot of people. It takes a lot of it out.
Facebook Messenger, you'll see the latest trades posted in there. So you have the collective wisdom and hard battlefield experience from these successful traders actively using their own money and taking the same trades and showing you. And then beyond that, you have go live and everything Tony's shown you in the IM Centre. So we do 27 hours a week of live trading. John Doherty calls signals for us, and he's working full time, brilliant trader. And then you have like Dr. Kathy Kirkland, as Tony's said, who does EC11 for more intermediate to advanced traders. So go live, I think there's something like 80 expert traders in the IM Academy who are top traders with you know, huge accounts. We're not allowed to talk percentages and money and entice people in. Most people come into Forex to trade their own money and be customers, and then there are a small number who do want to build teams. But what I love about this is it's a real product. The trading itself is what most people get excited about. If you have been in network marketing and M&M, like a lot of us, where we got burned out and tired from it, then this is, the perfect product. There's no infantry, nothing to hold in the garage. You haven't got to convince people to, buy a body wrap or something. This is the product, and it's fabulous. But about 5% of people do want to build a team, but you don't have to.
I mean, after doing a little bit of research myself, I have found out that a good 90% of people fail at Forex is because they do it alone. They don't know what they're doing. They inherit a lump sum or something like that, and they think, oh, I'll give that a go. And they see a few videos and they think that they're it, and they think they can get on with it and do it, and they do fail. You do need to, you need patience. You need to control your greed. And you just need to fit in and get on with it and trust the people who are training you, the experienced people. And once you've got that,
the people that say they've got it, they can learn it off YouTube. I mean, it's like skating on an ice rink with only one blade on.
That's true. And the cut, yeah. Anyway, but yes, it is. IML Academy is fantastic. It is fantastic, and the Ninja group that we've got is also fantastic.
Oh, yeah, I know.
The amount of people that are joining it and just getting so confident. You can see them growing with confidence that they're now doing their own trading times, and it's just incredible to see. It's phenomenal.
Looking forward to 2020. We're just wrapping up in the last 2 minutes of the hour, so thank you if you're watching the recording. As I say, do reach out to Tony if you'd like more information, and now is the perfect time to ask him about the free trial while you can practice, ask questions, slower time of the market, spend some time doing this instead of just eating chocolates and watching Netflix, and you'll be well set for when the market heads off up in the spring. At the moment, we're doing sometimes 20 pip moves. In the spring, you can be getting 50 or 60. It's just because everything's settling up towards the last month and of the year and the last quarter. So thank you very much for watching and for joining us. And thank you, Tony. It's been a great pleasure to have you co-host, and I've thoroughly enjoyed it and learnt a lot. So I appreciate your time and effort that you've put into this.
Pleasure. Look forward to the next one if there is one. I'll stop sharing now and hand it back to you.
Okay, then I can
there we
close. I'll stop recording.